I'm expecting couple of new learner will join us as well from next lesson.
Okay.
Okay, welcome. Good evening. So will start our lesson. Today we are going to start a new unit. Have you learned finance before?
Yeah, I've did it before. I've done
Uh,
it.
are you done this unit?
No, level 4.
Or you done in level 4?
Yeah.
We doing now level 5, yes?
Yeah.
So we'll do level 5 unit, which is a finance for managers.
Okay.
So which will go through.
Yeah.
Oh, is a Phil going to join us as well?
Okay.
Hello. Okay, hope so he will join us. Okay, so what do you know about finance? What you learn in under finance unit in level 4? Anything you remember?
I just know. It's like a. Is it not like accounting?
Yes, accounting.
Yeah, that's what I remember.
Okay, so how many types of statement we prepare in accounts?
Pardon?
How many types of financial statement we prepare in accounts?
To be honest, I can't remember.
Okay, which
But
we'll go through. Okay, so today lesson we are going to start. The title is Finance for Managers, and today our lesson will be focused on LO1, which is Learning Outcome 1, which we're supposed to address, understand the requirement and technique for financial reporting, recording and reporting, which we'll go through. And I wish end of the lesson really we achieve our objective. We'll discuss legal requirement, why we need to prepare the financial record. We'll go through some tax requirement. We'll discuss internal control requirement. We'll go through a bit overview about double entry bookkeeping. We'll discuss trial balance, what is meant by, and we'll discuss a little bit about the software and the computerized accounting, manual and computerized, what is the difference between them. And at the end of the lesson, I wish we'll achieve our objective, which we'll go through. And we'll discuss stakeholders. Normally in accounts, we prepare financial joining in that voice. Okay. So now, hello, welcome, Phil. Happy New Year. Welcome. You okay?
Hello, Happy New Year. Not too bad, thanks. How are you?
I'm fine, mate. So, today we are going to start a new unit, which is finance for managers, which is unit 4, level 5. I'm not sure. Have you learned before finance?
I think it was Unit 4.9. Yes.
It means you have completed this unit before.
I think so. I'll have to have a look.
Okay, no problem. We'll go through, welcome if you want to join. So always it's a good to. And further we'll start the new unit after 4 weeks, So today we'll go through LO1, which is Learning Outcome 1, and we'll go many types. So how many types of financial statement we prepare in accounts?
Sorry, can you repeat that, please?
How many types of financial statement normally we prepare in accounts?
Bank statements, invoices, credit notes.
Okay. What else?
Stock.
Okay, good. Uh, these are all the double entry bookkeeping record which normally we use internally, and
Yeah.
external user we normally prepare the four types of financial statement. Profit and loss, also we call income statement. Second statement we call balance sheet, financial position. Third we normally call as a cash flow statement or statement of cash flow. And the fourth statement we call equity statement or the shareholder statement. Okay. So these are the four financial statements. Those are compulsory to produce for limited companies. Either it is a public or the private, but for the private is a compulsory because they must have to publish the information on the public domain. So which we'll go through. What is meant by financial information?
Anything to do with money, really. Could be anything. Could be loans, bank statements, balances.
Well done, great. Anything related to money, which is, and is there a financial information help us anything to make some sort of decisions? What your views?
Sorry, can you
You're,
see that?
yes, if you're a manager in a company, financial information will help you.
Yeah.
True. That's why the title of the unit is Finance for Managers. So managers need a financial information to make some decisions.
Yeah.
We'll go through. So aims and objective of 2-day lessons. So our introduction to financial management. We'll discuss financial system. We'll go through explanation of the financial data and information. We'll discuss the financial statement, and we'll go through a bit, the financial ratio. And during next lesson, we'll calculate more ratios and discuss what is the data and what is the information, what is the difference between them. I wish end of the lesson you will be in a position to describe difference, explain different financial system and the financial control in place within your organization, like where you're working, what sort of the controls are in place, those are the financial control or not, and you will be in a position to explain what is the difference between financial management and financial accounting, and discuss meant by ratios and how we can calculate these ratios. Any question?
Not at this point now.
Okay, so what is the difference come in your mind between financial accounting and financial management?
Financial management, I believe that's managing finance, and accounting, I think it's more like bookkeeping and keeping a record of finance for the business.
Brilliant. Well done. Great. Financial accounting is a systematically record of business transaction in the book of accounts where the debit and credit rules apply. That's called double entry bookkeeping as well. And we prepare profit and loss, balance sheet, cash flow, and equity statement under the financial accounting. After every 12 months, the financial statement we need to prepare. ACCA is a financial chartered institute. AAT is a financial institute, accounting institute, and CA is a chartered accounting is a financial institute. CIMA is called Financial Management Institute, which is more we are dealing with the costing.
Okay.
Difference between them: financial accounting is external and management accounting is internal. External user to provide them financial information. We prepare financial statement and the people can see what sort of the information there, the company is performing well or not, and then they make the decision either to invest it, either to give the borrow money to these companies or not, on the basis of the financial information. And the financial management help managers to plan and control time, and normally is delays are the historical cost. Normally is financial accounting based on the historical cost. Historical cost mean, and when I bought the properties in 1990s, so at that time what was the cost of the property, I record on that cost. But the fund management accounting, current and future, what is the value today and what will be the future, so I need to record it. So financial accounting have a standard accounting standard like GAAP. GAAP is a UK accounting standard which is consists of General Acceptable Accounting Principle. FASB is called Financial Accounting Standard Board. SEC is called Security Exchange Commission. So we have to follow their rules under the financial accounting. But under the management or the financial management, we don't need to follow these gaps or these rules. Okay. Nature of information is more auditable. Financial accounting normally audit. End of the year we do audit of these accounts. These accounts represent true and fair view about the financial statement. Auditors normally give the views about the financial statement. Those are reliable, need to be consistent. Financial statement consistently. It need to be last year and this year clearly show the information what changes happen, and both year statement we have to present, so then the people can see how much the company gained from last year to this year. But in terms of the management accounting is not compulsory, it's internally used, so that's why we just constant, we need to be all disclose. Okay, so these are the big difference between management accounting and financial accounting. So please go through, which will in part of your learning outcome or the learning objective really we need to go through. Under the cost accounting we calculate all the cost, and we'll discuss about the fixed cost, variable cost, and the cost we can estimate it. How much is the cost we have to produce one product and service, but the financial accounting is external, uh, and the cost accounting and financial accounting is internal. Purpose of accounting system: to ensure that all transactions are correctly recorded and can gather together for a period in order to prepare set of financial statements. Accounting systems, where are the system? We have a transaction, we have a primary documents where we say purchase ledgers, sale ledgers, book of primary entry, cash book, sales book, sale return book. So all these called the book of prime entries, and then we prepare the ledgers account from them, trial balance, and then we'll prepare uh, various other statement. Transaction, like these are the example of transaction: cash sales, credit sales, sale return, receipt from credit customer. These are all transaction. Primary doc, receipt, till roll, sale invoices, credit notes. What is meant by credit note? Hello, anybody knows what is meant by credit note?
Hmm.
Have you ever have a credit note?
Yeah, it's when they pay you. So invoices, you got a bill to pay, but if it's a credit note, they put the money back in your account.
Well done. Like Sports Direct, when we'll return something, they give us a credit note, and that credit note we can use it when we buy next time. Credit note is sort of the cash.
Yeah.
We can convert it into the cash or refund. So book of prime entries, cash book, sale day book, sale return book, cash receipt book, cash payment book, purchase day book, purchase return book, cash payment book, petty cash and journal, these are all book of prime entries, and prime documents, these are. So these are the difference between them, and these are we prepare to get the some sort of financial information within accounts. So journal ledgers, nominal ledgers, like sale ledgers, purchase ledgers, those show the sales and the purchases. Dual effect, everything we have in accounts, double entry bookkeeping have a dual effect. Dual effect be a credit, which we'll go through next slide. So accounting equation is asset plus liabilities equal to capital. So asset is equal to liabilities plus capital. Net asset is equal to capital, which normally we call as accounting equation. Any question?
No.
Okay. So in accounts, we have a debit and credit. So what sort of the things goes on the debit? We use a short word is the debt click, which is mean D stand for debit, E stand for expense, A stand for assets, D stand for drawings. And C, credit side, it shows increase in liabilities will be credit, income will be credit, capital will be credit. So that's a debit and credit. So what is meant by assets? Any example of assets?
It's a source of making money.
Yes. Any example?
So if somebody lets out a property, that property is going to be their asset through rent. So they rent it out, people pay rent to live there. That property is going to be the owner's asset.
Well then. So asset is anything we own and have an economics value of it. Yes,
Yeah.
we can use it for business purposes, we can call asset. Property, plant, equipment, building, all these are our assets. Cash, receivables, yes, inventory, all these are our assets. So asset normally have a two types. One is called current asset, which we can use for the short period of time, normally 1 year, and the non-current asset, which we can use more than 1 year, like building, plant, machinery. Those are also called fixed assets. Then what is meant by liability? Liability. Anybody knows what is meant by liability?
Public
Okay,
liability.
liability mean obligation. Yes, we are obliged to pay. Yes,
Yeah.
legal obligation. If we loan bank overdraft is a liability. If we use overdraft, we have to pay back. It's our liability. And liability have two types. One is called current liability, short term, which we have to pay within 12 months. And the long term liability, which is non-current liabilities, like mortgage, which is we can settle after more than a year's time. Okay. Any question?
No.
So capital is mean simple investment. In the investment in a business, that's called capital. So next we are moving now our area of discussion. What is the difference between data and information? Data is a raw fact, no context, just number is called data. Information, data with the context, proceeds data, value added to the data, summarize, organize, and analyze. So like when your exam, when we have to submit, when we have to pay, all this become a information. Data is just numbers. So data, if we have a data, when we'll process it, it become a information. When we have a information, it's become our knowledge. When we have a knowledge, we can take action, we can make decision. So first thing, we need a data. how many companies and where the price is, how much prices they charge. Then have information which price is the best, which is the lower, which is the higher. Then it's become knowledge which company and where is the best in the term of the prices. Then we'll try to purchase from them. So we have a data, information, knowledge, and action. Then we can take actions and we actually do and make decisions. So now we're looking at the financial data. According to Learning Outcome 1, LOM1, we need to discuss about the financial data. Financial data is derived from the many sources, processed in many ways, and they use many people. Unfortunate, this means that there are many chances of the errors. Data could be wrong, yes? Like Tesco manipulate the figure, they said 180 million actually was 220 million profit. So they change the profit to show the higher profit. Instead of 180, they show 220. Capturing the right data at the right time is quite crucial. So first person who enter the data, if not enter the right data, it's not, we can't make the right decision. Like clock in and clock out. If they not clock in right time, clock out right time, then of course, we can't make it. Yes, we have a wrong data then. So we need to look around data, and that data will be first to make the decision, we can get the maximum. Financial data is whether the data is measured what is supposed to be measured. We can look around how much budget we have, how much we spend it. So data, information, and knowledge. Internal source of data, your accounting internally within our organization, like a financial management system in place in our organization. Anything we getting from direct from supplier, from customer, various spreadsheets or reports which we generate, those provide the data. External source of data, company house, which is a company website where register the company, we can get, they have to publish the reports, and we can get lot of information about the company from the company house. Databases provide the financial libraries, research document. So good information, what should be in it? It should be reliable. The information recorded is reliable, it's not wrong. The accurate need to be up to date. If I have information of 1990 about the company, that's not up to date. Relevant, we need to think about the information is relevant to my decision which I'm going to make, whatever the product we need to launch. To meet the needs of the user easy. So these are the characteristics we need to look around. Internal source of data, external source of data, like we discussed. Internal audit reports, financial system design, internal checks, control. So these are reliabilities. If we have a good these place, so we can say if these are reliable. Sources of published accounts, the sources of information. So definition of finance accounting is a keeping financial record up to date and prepare the financial record and the statement. Recording a business transaction, recording the information to the owner or the managers and other interested party, and advising them and they prepare the reports and the performance of the company. So company keeps record. Internal control provide checking procedures, customer queries used to generate accounts and meet the legal requirements. That's why we keep the record of the data and information and transactions. Role of accounting, accountant to check the financial data and information, summarize them, present them, and analyze them, interpret them. Sale trend previous year before. Financial accountant concerned with the external reporting, management accounting, the internal financial transaction, information, keep record and prepare. So management accountant look at the information about cost of material, labor, and overhead. What is meant by overheads? Any example of overhead cost?
No.
Okay. So if I'm making product, like we making Any product, let's see, we are going to making mobiles, yes? The mobile, all the chips and all the transistors, whatever we have within a product, we can trace it, how much worth of the things being used. Yes, but the company is paying fees to accountants to keep the record and prepare the financial accounts for them. They have the legal requirement, legal fees. They have an admin department. They do marketing, and these are all the expenses. Those we can't trace within a product, but these are the expense for the business is called overhead. That directly not involved in the production, but still is expense for the business. Does it make sense?
Yeah.
Interpret it and prepare the report. So we can prepare the reports from these accounts, like we already discussed financial accounts and financial management. So what is a financial information system? The type of the business software used to input, accumulate, and analyze the financial and accounting data. Have you heard about Sage accounting? Sage software?
Yeah.
Sage is one of accounting software which we use to record the business transactions, which we use to prepare the financial accounts. I'll show you next lesson some Sage, examples as well. Effective and helpful for the business. It's produce reports such as accounting report, cash flow statement, and financial reports. Good financial management decision help the managers to run the business effectively. Financial management system is a financial information all managers within our organization. Financial management system process and proceed and use financial management system support financial managers. Keeping all payment and receipt like management system. We need to depreciate our asset, how much is real asset worth up now, keeping track of our liability, looking income and expenditure, keeping record date, maintain complete and accurate account. These are all. Okay, financial management. We look around the cash management. How much money in the business, how much is going out of the business. We look, extra spare cash where we'll invest, where we can get maximum return on our investment. Capital budgeting, where we can borrow the money, where we invest, what type of asset, we'll buy for the business. Financial planning, we look around, cash is required for future, and we plan, where we'll borrow the money. Either we'll issue more shares to the public to generate the fund, or we can sell, some assets. Currently, those we have to meet the requirement of the business. So it's been explained in these slides. So please go through as well, just background reading. So goal of financial management. As a management, financial management, maximize profit, minimize costs, maximize market shares, maximize the front value per share of the company's existing stock, maximize the market value of existing owner equity. If we shares capital, maximize it. So when will work and the company reputation will increase. Anybody heard about Bitcoin?
No.
Bitcoins on BBC? Cryptocurrency, the electronic currency, Bitcoins, the value is tremendously increased. It's £1 coin, now it's become £10,000 around. 4,000. This been slightly fluctuate last 2-3 weeks, but it's a huge. If you invested £1, the value, because the lot of demand of this currency. Okay, financial organizations. Organization culture and financial control need to be in place within our organization. To be more interesting, we need to be look around. Lot of company, they just Enron, one of the gas electricity company, used to work in UK up to 2000, is being collapsed because they not produce and provide not right financial statement. and ultimately they manipulate the profit, they lie to the people, and ultimately it's been closed. They can't afford it to pay back money to their and meet their expenses even. So end of the day. So this is the video is not working at the minute. So financial statement, I put it there, income statement, balance sheet, cash flow statement, and statement of change in equity. So I'm going to send you as well, you both, and these are the two financial statement I included. I'm going to send you and will include you as well, and Marks and Spencer financial report and the next. I think so. Those both favorite stores, yes. Hello. Yes,
Hello.
are you there? So this is Marks and Spencer, profit and loss there, and the balance sheet. So please do that will provide you lot of financial information. How much worth of the company, how many shares they have issued, yes, how much pension they are giving. So please, if you go through these, yes, that will give you all the information, financial information, and that is a financial accounting as well, management accounting is compulsory for the company to keep record. But these are the external user as well internal, so those are the financial statement. So please, when you go through, is everything within report. We'll say financial statements. This is the income statement, which shows revenue, cost of sales, gross profit. Then we have a balance sheet as well, which shows all our assets, liabilities. Yes. So how much is the value? We have goodwill, how much company have the last year, 3-4 years given there. So please just go through a bit, concern that give you a lot of information about the financial statements. These are the statement and the financial statement, those we prepare all their cash flow within a report. Okay, let's move to next now. Any question up to now?
No.
Okay. In accounts we prepare and in under the financial management, because this is a finance for managers and managers make a budget. And the budget, what is meant by budget? Any definition about budget?
It's how much money you got, basically, and how much you got to spend, and how much money you can spare.
Okay, well then. So budget is a plan, is a financial plan expressed in a financial quantitative term. Quantitative mean in numbers, and we extend forward for a period in future. Budget is widely used in all size and all types of the organization for the planning and control. We stay within a budget, like we are lot of heard about NHS budget is a constraint. There is a less budget. There is a high demand. There is a gap. There is doctors, nurses shortage due to the budget. We don't have enough money. So all these are problems. Yes, if we plan well before, we control in place where we have a loss phase, efficiencies we need to improve. So we need to be look around the budget. Budget will define as a precise target concerning about the cash receipt and the payment. Budget could be sale budget, budget could be about the stock requirement, budget could be about the labor, budget could be about the production. Okay, budget help us to plan, coordinate, communicate, motivation, and control and evaluation. If we have a budget, we can plan where we are, where we want to see our organization within a budget. Next budget, we can discuss with department, we can coordinate it. We can communicate it. You have this budget, that budget, how much you achieve, how many employees you have, how much salary you're paying within. You must stay within a budget. If we'll stay within a budget, that will be motivates us to be work hard and stay within a budget. Budget, if we not according to budget, we put the control. Why is the waste there? We supposed to be raw material, where what's happened? How much is the stolen material? What's happened with the material? Why we get the expensive? Tender not being in place, and those sort of corrective measure, and we can evaluate it, every pound what we gain out of it. Okay. Then we have a stakeholders. What is meant by stakeholders? Anybody heard of stakeholders?
Yeah.
What is meant by stakeholders?
There are different types of stakeholders. You got shareholders, customers, staff.
Okay, well done. So, internal stakeholder could be, what could be? Management,
Yeah.
employees, yes.
Yeah.
Some stakeholder external, supplier, yes.
Yeah.
Okay. So we need to think about the financial information, because a lot of stakeholder required, they make the decision. HMRC, based on the financial statement, can make the decision how much tax we supposed to pay. Yes, what are the tax liabilities? So local government look around as well how well the company is performing within a local area. Investor can look around, if the company, how much dividend they are paying, return on their investment. Supplier can borrow us or supply the goods and credit basis based on the company's performance. Employees can look around the company's performing. Managers can make the decision about the. So all these are stakeholders. Stakeholders mean anybody who has any interest within a company is called stakeholders. Customer could be a stakeholder, because customer really keen if the company could provide the goods, whatever they promise, within a price, within a quality, and within a time. So up to now, we discussed what is the difference between financial management and financial accounting. We discussed how many type of financial statement we prepare. We discussed debt click, double entry bookkeeping systems. We discussed what is the difference between information. We discuss about internal, external sources of the data, and we discuss stakeholders, and we discuss, financial statement, how many types of we prepare, and under the financial accounting. And can we play a bit quiz?
Yeah.
Okay, let's try a bit quiz. And please go through these two financial statements, which I'll send you as well, and it's on Moodle as well. I'm going to upload further. And then we'll go through different ledgers during our next lesson as well. Okay, we'll see. Okay, let's we'll play. So first question, retain profit. We heard about retain profit. When it's come, which one is the right? Retain profit. Any thought? Guess? Retain profit, the profit which we retain in a business, yes? After meeting all the expenses. Which one you think is correct? A, B, C, D?
A.
Yes. Okay. Well done, correct. Which which of the following would improve the gross profit margin of manufacturing business? Gross profit comes sales less cost of sales equal to gross profit. So new production method will reduce the factory defect rate. Overhead reduce. Our raw material supplier of the business increase their prices. The marketing department offer higher customer discount. So which one you think is correct? Margin is a percentage between selling price and the cost of sales after deducting what's come, that's your gross profit. How much percent?
D.
That's not. Okay. A company make the gross profit 22% of the sale. What is the cost of sales? If my gross profit is 22 out of 100, so 78% will be my cost of sale. What will be 78% of 450,000? Which figure is correct? A, B, C, or D? Hello, Christine, where you are? Yes.
Can you make the questions closer, please?
So a business make a gross profit margin which is 22%. Gross profits comes sales less cost of sales. So my sales value is 450,000. So my 22% I make the profit. What was my cost of sales? Because the rest will be my cost of sales, which is supposed to be 78%. 78% of 450,000, what will be? Which amount do you think is correct? Which options? 200,000, not possible to calculate. 351,000, 78% of 450,000, or 99,000.
C.
C. Well done, correct. Okay. Which factor below would increase the operating profit margin? Operating profit mean after the gross profit, all overhead expenses will minus, and then we'll get the operating profit. Operating profit means the running profit of the business. Okay. So an increase in overhead will improve the profit. Increase in fixed asset spending will improve. Or increase in the gross profit, because gross profit come before the operating profit. If my gross profit increase, what we think on operating profit will be? Or increase the trade creditors. Trade creditors mean the people those we supposed to pay, like our supplier. We are buying our credit goods. Don't have any concern with the loss. Which option we think is correct? Don't worry, just think, what your, because we can learn from it. Which option I will go, Phil? In which option you think? or C?
I don't know.
Sorry, C? Yes?
Yes.
Well done, correct. Okay, next. Which of the following action will not improve the gross profit? Gross profits come after sales less cost of sales. So which action of these increase the sale price of the product? Will normally should be increased. Offer few discount to the customer, reduce advertising expenses, or change the supplier to the cheaper raw material. Not improve. All other can improve. Which one is not improve? Three of them could improve. One of them not improve, which is head expense. Which one is our head expense? We just said. On your
A.
go. C. A, B, C, D. You want me to try C? Yes.
Okay.
It's correct. Yes. Okay, next. A business achieve total sales and the cost of sales and overheads. What will be gross profit? Gross profit comes sales minus cost of sales. So how much will be gross profit then? Sales less cost of sales equal to gross profit. Yes, please. Which one you think? $250,000 minus $110,000 come. 250 minus 110. Come on, guys. 250 less 110. How much will be left?
90,000.
100 and
Yeah,
250.
140,000.
No problem. Next time, make sure we'll use calculator. The profit and loss account shows what shows? It's not shows asset and liability. That's part of balance sheet. How the business is traded in a specific period. The cash is business into or the amount of the money made by the selling surplus asset. The business is traded for the option you think. Profit or loss shows income and expenditures. And the profit, how much we gain, either profit or loss. So which one we think, Is it first one, second one, third one, or the fourth one? Don't worry, just select the option, which one you think.
C.
See. It should be B. Okay, next. A gross profit is 37.5% and its sales is 15 million. What will be cost of sale? If 100 minus 37.5, so how much will be left? 63.5% of 15. What will become? 63% of 15. Calculate percentage all, yes. So if you use calculator, yes, under accessories if you are using computer. So look there, 15 because my profit is 37. Look there, always everything is 100%. If I'll take out profit, which is my 37.5%, yes, so my 62.5% should be my cost of sales. So if I'll take, yes, divided by 100, it should be, yes.
Yeah.
So in this way, try to calculate. Okay, which of the following is the correct calculation of the gross profit? Gross profit comes sales less cost of sales. So which option is correct? Hello, Christine, are you there? Which option is correct? A, B, C, or D?
I don't know.
Okay, formula is sales less cost of sales equal to gross profit. So sales less cost of sales is a given, yes?
Yeah.
So, which I'll give you next lesson, formulas as well, separate sheet for it. Which of the following would separately shown exceptional item in the profit and loss? Exceptional, those not really part of it. Anything outside is too much, so we can show. Just, pick the option, which one you think, Any option, no problem. Don't worry. We're just doing, review and we're learning from it. Yes, Phil. Which one? A, B, C, D?
Mm.
A.
Yeah.
Well done. Correct. Good. Yes, 80% good. You can review where we went wrong. So don't worry. You can carry on playing with these quiz. Carry on developing your understanding. Yes, that was supposed to be new production method. Reduce, reject. Yes, this should be the amount. Yes, increase gross profit. Reduce. You're right. Yes. Traded. As a business has traded for a specific period of time. So profit and loss shows, how the trade went. The business make the profit or loss. Well done. All your credits correct. Okay. Any question? So what is the difference between data and information? Just a recap, what is the difference between data and information?
Data is more like statistics and figures, numbers. Information is more of like it explains it all properly.
Yes, well done. Data with the context is become a information, yes? Value added data, proceed data, process data is called information. Okay. Difference between which one is the internal and external accounting, financial or management? Which one is external? Financial accounting, management accounting? External. Management accounting and or financial accounting. Which one is the external accounting?
Sorry, can you repeat that, please?
Which accounting is externally reports, financial accounting or management accounting?
Financial accounting.
Well done, financial accounting, great. So please go through just these slides. And budget, what is meant by budget? Budget is a financial plan, yes. We'll make budget where we are, where we want to, what really we want to achieve. That is called budget and budgetary control, which we'll go through further during our next lessons. The element of LO1. So that's your, I'm going to send you the book as well. So this is we discuss legal requirements of internal requirement. We discuss double entry bookkeeping, debt click, yes. We discuss all the debit and credit shows under trial balance, and I mention you how many types of statement we prepare, and the normally limited company must need to publish 4 types of statements. Those we discuss about income statement, cash flow statement, financial position, and shareholder statement. So useful of financial statement is internal and external stakeholders can use these statements to make a decision, like supplier can make a decision based on the information that either they lend us money or credit is or not. So that's all which we'll go through for the lesson. Any question?
No.
That's about it, really.
Okay. So please go through these slides, just a bit read, and I'll send you recording as well, and then we'll go through load on Moodle. So have a nice time, have a nice week then.
Thanks. You too.
Okay, Christian. So next lesson we'll do on Thursday, 7:30. Is it okay?
Yeah, that's fine.
Brilliant.
Can you send all future invites to my Google Mail account, my Google Mail email address, because then it will automatically sync with my calendar.
Okay. Can you send me your email? Have my email?
Yeah, you used to send it on that email before. I can give it you now if you want to take note of it.
Okay, no problem. Just you have my email. Just drop me email. I'll reply on it.
Yeah, okay.
So that will be easier. Will be resaved. Huh? Okay. Have a nice time.
Thanks. You too.
Okay. We'll see you next week on Thursday.
Yeah.
Okay. Thank you. Bye-bye.
Bye.
Bye.